If you're working a full-time job, don't trade stocks. But Cody, you're a professional trader. Why are you telling me not to trade stocks? Are you just trying to keep all the GameStop gains for yourself? Yeah, you got me. But no, it's because when I first started trading stocks, I also had a full-time job myself, and I can tell you from experience that for a 9-to-5 lifestyle, it's a terrible way to grow your savings. And here are all the reasons why. To understand, let's take a look at what your full day workday might look like and how trading stocks fits in. First, wake up, eat breakfast, sit in the traffic, or take public transit for anywhere from 30 minutes to an hour to get to work. Usually this is sometime between 7 to 9 a.m. Unfortunately, this overlaps as one of the most important times of the trading day, the pre-market. The pre-market often gives clue to how the day is going to play out, and this is where big overnight moves are revealed. So traders absolutely need this time to either game plan for the day or figure out how not to go bankrupt if they held stock overnight. So if you're sitting in a full-time job as well, then you're probably sitting in your car wondering how to survive that 5% gap down in Tesla, or you should jump into that 3% pop in Apple while still on the road, or while being packed in like a sardine in the public transit. Good luck focusing on either way. You can't. So you either do nothing or make the wrong move and are down big to start your day. Great. Point being is, when you have a full-time job, you can't prepare like what's required of a profitable stock traders. There's just too much going on in the mornings. And that's for the East Coasters. If you live on the West Coast, those pre-market hours for the NYSE, which you're probably trading, are at 5 a.m. for you. Good luck. Trust me, I have tried it. It's doable for a day or two, but after that, it's literally impossible to maintain because you also have to do your day job after. If you can somehow pull this off, please tell me what kind of Red Bull you're taking because I need that as well. Alright, so now it's during the workday. You have got some trades in mind. When and if this low float stock you're holding falls below a key level, you will sell your position to not lose your house. Boom! Alert hits. It breaks below and starts crashing. You pull up your account and sell, but suddenly you freeze because now your boss is behind you now. He's looking over your shoulder, wondering why you're drawing trend lines instead of preparing that client PowerPoint that he asked you to do a week ago. He doesn't know that you're $10,000 deep in the meme stock, which you shouldn't have never got in the first place. Even if he knows, he doesn't care. All he cares about is if you got that report to Kelly from the marketing team yet. So you stop selling that stocks to not get fired and take even bigger losses on your trade. You see, it's really hard to trade when it's supposed to be working your day job, especially when you're in the office. Now, the afternoons rolls around. You have taken the L, but you have managed to get that report to Kelly from the marketing team. Finally, time to watch the market's closing hour between 3 to 4 p.m. because you know there will be a good amount of opportunities today. Before you pop open that trading chart, suddenly there's a sound and an email notification. And the CEO is requesting a town hall at 4 p.m. to discuss workplace ethics. 4 p.m. Really? Does he not know that Nvidia is releasing earnings today? And that you need to see if it will break the $100 support line for a nice capitulation trade? What do you mean meeting at 4 p.m.? How am I supposed to make bank if I have to go to this town hall? There's always constant distractions that prevents you from trading your plan. You get the picture, right? The point is that when you're working a full-time job, no matter from the office or at home, there are just too many distractions, too many obligations for your job. The constant interruptions and thoughts of work you need to do will break you out of the flow with the markets and destroy your trading performance. It's honestly unavoidable. That's why many people say multitasking is impossible, especially when you are multitasking at one of the world's most difficult games, trading stocks. Look, we have all heard that 95% of the traders lose money. That's a statistically true fact. What's even truer is that your 5% odds of becoming a profitable stock trader just went down to 0.1% if you're also working a full-time job. So if you have been losing money so far trading stocks, this could very well be the reason why. I know from experience that stock trading is not a passive game. Stock trading is a full-time, actually even more than full-time, heavy commitment. Well, if you want to be profitable, that is. If you just want to gamble without putting in full-time work, just go to the casino and you will have better odds, and at least you will get a free drink or maybe two. So because of commitments, distractions, and split between related to working a full-time job and trading stocks on the side is always a losing game in the long run. Don't do it. So what do we do then? Where should we full-time workers put our money to get the most results? Well, now, notice I said stock trading, but I didn't say investing or even options trading. You see where I'm getting at? First, let's define the difference between stock trading and investing. Stock trading is to actively trade stocks for short period price movement. That's what I started out doing, but stopped for various reasons. This is the highly glorified style of trading since online pages like Reddit, Wall Street Bets have people posting screenshots of huge gains on meme stocks to flex, while also hiding the fact that they blew up their account a month later. But no one needs to see that, right? I'm not saying that it's impossible to be a consistent, profitable, short-term stock trader. It's really hard, and you 100% need to dedicate a lot of time to this. Something that's nearly impossible with a full-time job. Investing, on the other hand, is what people know the famous Warren Buffett for. Buy and hold fundamentally sound stocks for a long time period, and hopefully one day you'll become as rich as him. Or you buy something like an ETF that tracks the whole market altogether, which generally grow between 6 to 10% on average per year. Yes, there are losing years. This is not a 100% foolproof strategy, but this generally works very well over a long-term horizon and is mostly passive, which is perfect for you if you're working full-time. So that's all he does. Then why isn't everyone a super billionaire investor? Well, because you're just kind of stuck at 6 to 10% on average per year. You see, Buffett doesn't tell you everything, especially not the other part of his passive investing strategy that actually doubles his gain from the traditional investing from 6 to 10% basis. What he does is he sells Ray Shadow Legends. I'm kidding. He sells put options. Let me tell you a story. Around 2008, after the big financial crisis, Berkshire Hathaway's, Buffett's company, sold a large amount of long-term put options on the stock market. These were essentially bets that these indexes would be higher at the expiration date, many years later, than at the time of the option sale. So by selling these put options, Buffett collects a lot of money, which is called a premium upfront, which he can then use to sell more put options or hold some stocks for the long-term investment. Because the best part of selling a put option is that regardless of what happens with the stock price or stock market, you get to pay first, immediately. After you got paid that premium, the very simplified version is that two things can happen. One, if the stock price stays above the strike price at the expiration date, then you just pocket that premium and nothing happens. But if the price falls below the strike price, you essentially get forced to buy that stock at that agreed price, which is now higher than the market price, meaning your position is now in the red. But when you are forced to buy that underlying stocks, it's at a much lower price, often becoming a very good bargain. Especially as that's for fundamentally sound stocks like Apple or Nvidia. So if you can make money first, then in the worst case scenario, end up owning that stocks as an investment. Just think of it this way. Selling put option is very similar to selling insurance. Just like how your auto or home insurance company gets paid by you first. You get paid by the buyers first. Now, you don't get to randomly raise it like those scammy insurance companies just because you feel like it. But yeah, it's very similar in the way it works. In no way am I saying selling put option is always a surefire thing. But think of it. Usually insurance companies come out on top. Not always, but more often than not. And this is actually how I started growing my money back when I had a full-time job as well. It's called the set and done strategy, which primarily includes selling put options and supplementing it with holding stocks for longer investments. And so far, this strategy has gotten between 20 to 25% year-over-year return for the last 5 years, which is doubling the S&P 500 in that period and growing my account from 500K to 1.6 million, blah, blah, blah. Financial YouTuber talk, but that's not the real important part. The most important part, why I'm even telling you this, is because it only takes me 5 minutes per day to manage my position. And that's why I'm even telling you this, because in my past 12 years of trading and investing experience, I found that this is the best way for people working full-time jobs. Because not worrying about the markets when you are scrambling in the morning, no balancing obligation for your job and stocks, and no stressing about all the random things that pop up during your working day. And look, selling put options is nothing new. It's not like I just told you about a new scammy crypto coin. It's literally an option strategy that all the banks and big institutional investors has been using forever. But for some reason, it just got under the radar when it comes to retail investor like yourself. I think it's because it seems complex, but it's actually not. Anyways, so that's why if you're working a full-time job, don't trade stocks. Instead, check out this video here where I break down how I sell put options to generate passive income. It will be useful, especially if you're working full-time. Good luck.